Hey everybody, Jake here with Jake Wu Market Research to go over an educational video about the MACD, but in a less traditional way. So when people think of the MACD, they usually think of using the MACD as a signal for downside or upside when the MACD crosses up or down through the signal line. So if you're looking at the MACD here on the chart, your blue line is the actual MACD line. The yellow line is your signal line. And so whenever the blue line crosses below the signal line, that is generally a signal for downside. And then, as I mentioned, when the MACD blue line crosses above the signal line, that is generally a confirmation of a new trend break to the upside. So this definitely works. I use the MACD very often. I use MACD crosses very often, but I also use the MACD in two other ways. One of those ways is the zero line, and another way is looking at simple divergence on the MACD. So we'll start with the zero line. Essentially, the zero line is the divider between positive and negative territory for the MACD. So anytime the MACD line and the signal line are above the zero line, you're in positive territory. Anytime you're below the zero line, you guessed it, you're in negative territory. So there is a great way to use the MACD pretty much whenever the MACD line, the blue line, crosses below the zero line or above the zero line. So you'll see here that we have red lines and green lines, vertical lines here, three different instances over the last 4.5 years. I did this video in May of 2023, so we're looking back all the way to around July of 2018. And you'll see there's three pretty distinct signals here where the MACD crosses below or back above the zero line. And you'll notice here that a lot of the time the MACD spends most of its quote unquote lifetime either above the zero line or below the zero line. The cross doesn't happen as much as you may think, or at least on the longer term time frames. If you're looking at shorter term time frames, maybe day trading, you're definitely going to see that in higher frequency. In this case, I wanted to just point out some simple signals that you can see here on the chart. Whenever the MACD line crosses below the zero line, starting back in November of 2018, you'll see here that you actually had a breakdown here. And that's one signal, right? But it's really great to use signals together with either another indicator, maybe the RSI or the Williams percent range, things like that, or simple just price patterns. So for example, here you can see that we crossed below the zero line on the MACD, and then 3 weeks after, because we are looking at a weekly candle, you'll see here that we had this pretty defined bear flag. So one, you've got the breakdown of the MACD below the zero line. Two, you've got this bear flag forming, and then you've got the break to the downside. So a pretty strong move. You ended up getting the signal down here around 167, and then we actually ended up bottoming out around 143 in December of 2018. And so you can see here, once again, the MACD crosses back above the zero line here right around March of 2019. So it did take a while for the MACD to continue up and actually break back above the zero line. So you can see here that your initial signal actually was the MACD cross. A lot of people would have actually likely entered here. When the MACD crossed to the upside, and you can actually see here that this was a little further over, one candle over, that is when you really started to get momentum here. And you can see here that pretty much right when we crossed up, that's when we quickly went from around 171 up to around 190 within about 8 weeks. And so that's a pretty strong move. That's if we're looking at just a percent move on that, that's about an 11-12% move in 2 months. For an index, that's a pretty strong move. So both of these really had both the MACD signal below the zero line and the MACD signal above the zero line was a great way to measure that momentum was starting to fade on the downside and then starting to really accelerate on the upside once we crossed back over. So ideally, you want to use the MACD cross, but also use the MACD crossing above the signal, but then using the MACD crossing above the zero line to really get conviction in your trade. In this case, you can see here back in COVID, we actually had a false signal. So that is something I also wanted to mention is with any indicator out there in the market, you are going to see false signals. Just because the MACD zero line crosses below, the MACD crosses below the zero line does not mean that you're going to have a big move. Now, one thing that you could do is you could simply look and see, okay, well, price has pretty much dropped about 30% during COVID before the MACD line crossed below the zero line. So you have to consider, in a relative basis, how much more downside can we have if we dropped literally 30% in about 5.5 weeks for the Qs in this particular case. So you do have to use this in kind of a little bit of a common sense fashion as well. If you do have a big downside move, very quick downside move before the zero line is broken to the downside, you do have to consider, what's my risk to reward here? How much further could this go? And as I mentioned, this is when you want to pull out maybe the Williams percent range or the RSI, looking for overbought, oversold areas depending on which signal you're looking at, looking for divergence on the Williams percent range or the RSI to really kind of overlay those all together to get a stronger signal. One thing that you don't want to do is you don't want to use the MACD with like 7 different indicators, because you're always going to have some indicator showing something different than maybe the other 6 or 7 are showing. So you don't want to have analysis paralysis where you're never going to get a signal because they don't all align. If I were to recommend which indicators to use with the MACD, I would definitely say Williams percent range and the RSI. I can do a video on maybe using those 3 together, and that will be a follow-up video from this one, but I do want to focus mainly on just the MACD in this particular video. Once again, you can see here in February 2022, we initially had a little bit of a move down. You can see here that the zero line did get crossed by the MACD back in February, as I mentioned. And then you can see here that we did have a little bit of a rally here before continuing down. You can see here that we had a little bit of a potential cross signal here, and then you can see that we just rolled over and continued down. So a really strong move to the downside after this signal back in February of 2022. And then you can see that it took quite a while to actually kind of start bottoming out and then finally breaking to the upside. Now, the question is, how could I maybe tell that momentum was fading before the MACD line crossed back above the zero line? Because, you can see here that we bottomed out back in October down here right around 253, 254 of 2022. And then the MACD did not cross back above the zero line until around 295, 296. So what is a way that you can really tell maybe we're starting to bottom out, or maybe we're starting to top out? Well, in this case, you can see here that you definitely have divergence here on both the upside above the zero line and the downside here. First example is pretty much from September of 2020 all the way to November of 2021. So this is a great example of really having to wait for a pretty strong signal here. So one thing that I would mention here especially is, one, you could tell momentum was fading for quite some time. However, that doesn't mean that you had to be short the market once you had pretty much a higher high here back in February of 2021, and then a lower high here on the MACD. You can see here that we had a slight pullback, but then we continued to grind higher and higher. What you want to do is you want to see, okay, maybe after the third high here, a lower high, maybe that's when you really want to start looking at things. And then you want to start using just simple kind of support zones like you would on a price chart, right? So you got this area here. You can see that the MACD bounced off this general area 3 different times. And then finally, once the MACD crossed below this level here, in this case, that was right around 9.85 on the y-axis here, that was really your signal. So you really need to use not just divergence. You do need to use just basic levels that are holding and then finally breaking down. And as I mentioned, you can use horizontal levels and you can use patterns on indicators, not just price. You can really apply that to multiple parts of the chart. So same thing here. You can see here on the opposite side of the spectrum, when the market was starting to hit lower lows, you can see that the MACD here was actually starting to hit higher lows. So we bottomed out here in June of 2022 on the MACD, but then we actually hit a new low here back in October of 2022, but we hit a higher low on the MACD, and you can see here by the upward sloping arrow here. Now, same thing, right? You could really apply pretty similar kind of areas here with the MACD on the upside too, right? We really failed to get above this initial peak here about negative 5.8. You can see here that we failed to get above it here in August 2022. We failed to get above it here in December of 2022. And then finally, once we broke above that area, that's when you really start to get acceleration towards the zero line. And then once the MACD actually crossed above the zero line, that's when you really had a much stronger move, and that's when momentum really started to accelerate. So being able to use 1, the zero line, 2, divergence, 3, throwing in, the MACD crosses both the upside and the downside cross, but then using very basic horizontal levels on the MACD and seeing when the MACD finally crosses out through a threshold that it hasn't been able to for a while, that's really your signal. So, hopefully this video was helpful in understanding how you can use all of these different MACD strategies together rather than just using one or the other. Using all 3, all 4, as I mentioned, are really a great way to get more conviction and get a better signal rather than having to just use one signal. Because a lot of the time, if you're just using one signal, you can easily get a false signal. If you're just using a MACD cross, for example, here back in pretty much the area from 2020 all the way to 2021, you can see there were a lot of times where you kind of had a MACD cross to the downside. And then, for example, here, I'm going to draw a line. You can see here, MACD crosses down here, and then you really only had one month of a new low until you started to reverse again. And look at how long it took the MACD to really start to kind of curl back up. You get a false signal, you continue down. But notice that you're hitting a higher low on price. And so there are times where you will get these weird false signals using the MACD. So I'll definitely do a follow-up video on using the MACD, the RSI, and the Williams percent range to really, really nail down entries and exits and really signals for potential big reversals in the market. As I mentioned, I'm mostly looking at the markets on a daily, weekly, and monthly time frame. So that's likely what I'll focus on in that video is longer term. But a lot of the time, things are fractal. What you're using on a daily chart, you can use on maybe a 30-minute or a 10-minute chart. But note that each stock or asset or vehicle that you're using does have its own personality. Something that works really well with QQQ may not work as well with Tesla, or you may get more false signals with Tesla using the zero line. So it is important to see, okay, how many times has the MACD crossed below the zero line and then crossed back up? What were the signals that actually produced alpha? What were the ones that were just false signals and you had a reversal right after? So you do want to always go back and look at the historical data and see, okay, I see that Tesla's literally crossed above and below the zero line 10 times in the last 4 years, where something like the Qs, this has only happened really 3 separate times here. And so the less amount of times it happens, the stronger a lot of the time it is. So just keep that in mind. And as I mentioned, if you do find this information useful, you will definitely like the follow-up video that I do. I'll post it on my channel. So if you do want to follow up with the next video, please like and subscribe this video so then you're able to get the next video to pop up in your YouTube feed. And if you want to turn on notifications, I try to put out weekly updates every 2 weeks for just looking at the broad markets and a couple individual names. If you do want maybe a little more day-to-day analysis, I also do have a Twitter subscription, $10 a month. I'll put the link in the description of the video as well. If you want to check that out, you just go to my Twitter, click subscribe in the top right handle of my profile, and you can get access to daily trade ideas, daily broad market updates, weekend updates. I do 2 exclusive trade idea videos a month that are not posted publicly. They're private, and that is a way to really save time on your end. One of the things that I really want to focus on, and I do focus on in the subscription, is to save you time. I'm providing trade ideas and market perspectives. So one, you may see the market in another way, but if you have a full-time job and you don't have time to do the analysis on your own, that's what I'm providing. I'm providing that analysis so you know exactly what to look for, and you can apply that analysis to your own strategy and really formulate your own trade and your own trade idea based on the information that I'm putting out. So this is not blind trading and blind following of trades that I take. It's taking that information. I kind of like to look at myself as maybe a market architect where I'm providing the blueprint, and then I hand it off to you to take that blueprint and do what you'd like with it and apply some of your strategy, your risk tolerance, and formulate an idea through the information that I put out. So thank you so much for listening to this video. I hope it was helpful, and definitely check out some of the other educational videos that I will have coming out soon, and a couple of the ones that I already have out. Everybody have a great day. Thanks again for watching. Make sure to like and subscribe if you enjoy these videos, and definitely check out the Twitter subscription if you are interested. Thanks so much and have a great day.